On the one hand, we think the consumer is healthy. So if I act as an economist for a moment, the key drivers of the consumer are the health of the labor market, job growth, and wage growth. Those have clearly slowed from their peaks over the last couple of years, but they still look very healthy to us. However, there's a different answer for your investor, because an investor cares not just about the health of the consumer, but whether the consumer is getting healthier or weaker. And right now, even though we think the consumer is healthy, we don't really expect job growth or wage growth to re-accelerate. So it wouldn't be my top pick in the U.S. equity market.
Ben, how are you approaching the dividend aristocrats in this kind of environment, low rates regime and slow growth environment? And what is looking most compelling from a buyback and a dividend point of view?
When we look at the last few years, it's been a very difficult environment for dividend stocks. They've traded at some of their largest valuation discounts ever relative to history. And same thing if you look at the sectors that investors sometimes call bond proxies, sectors like healthcare, utilities, consumer staples. Part of the reason for that is that it's very hard to buy dividends when you can get 5% on a treasury or on cash. So as the Fed cuts, history suggests those sectors should outperform. We've seen a little bit of that in the last month, and our expectation is that will continue. We think those parts of the market are pretty attractive.
How much defence do you need to be building into the portfolio? You know that you mentioned healthcare. That's been a very popular overweight, as has utilities. Do we need to take out some insurance at this point? And what should that look like, Ben, given the balance of risks, especially after the election?
Well, for us, the best time to buy insurance is when it's cheap. And right now, volatility does look fairly low, especially if you compare it with, again, that historical pattern around elections. History would tell you vol should rise between now and election day, and that means for investors who want to hedge, sooner is better than later.